Welcome to the channel. This is Jacob, your LA realtor, and you may have already heard the news about the recently approved new mortgage term. If you haven't, here's a quick recap. So 2 months ago, at the beginning of March, the Federal Housing Administration, which is better known as FHA, introduced a new term for which you can get a mortgage. And now it can be as long as 40 years. Does it make even a sense to consider a 40-year mortgage? Can any buyer be eligible for such a long-term loan? And actually, what are the pros and cons of a 40-year mortgage? So we're going to run the numbers and see what's going on. Home prices in California are just unstoppable. Hence, the main purpose of a 40-year mortgage is to possibly reduce your monthly payment by breaking down the entire loan amount over a longer period of time, which will make your home purchase more affordable. Obviously, using such a long-term loan will result in a significantly higher interest paid over the course of mortgage. But first, let's start with cons that might be not that obvious at the first glance. There are two types of mortgages, qualified and non-qualified. Qualified loan is when you're getting pre-approved for a mortgage based on your tax returns, W-2 forms, which is a standard approach. And non-qualified mortgage is a more creative way of qualifying you as a borrower. For instance, the lender will look at your bank statements, income, expenses, letters from CPA, especially if you are self-employed. Now, a 40-year mortgage is considered a non-qualified loan. Therefore, not even all financial institutions can offer you such a long-term loan, except for credit organizations that are better known as portfolio lenders. That's when the loan remains on the lender's balance and is not sold to other financial institutions. Second con is that, again, since a 40-year mortgage is considered non-qualified, you may have additional negative conditions in your loan documents. For example, the first 10 years you will have interest-only payments. In this case, your payment will be less, which is true, but it's not going to include the principals. You may also have a higher closing cost if you go with a 40-year mortgage. Third con is that with a 40-year loan, most likely your interest rate will be higher compared to a standard term. That is again because the 40-year mortgage is considered non-qualified loan and therefore it carries more risk to the lender. The last but not least con is slow equity building. Equity is your capital in real estate, which equals to the difference between the fair value of the property and the total amount of money that you owe on it. When you obtain a 40-year loan, you get the lowest monthly payment, which may barely cover your interest portion of the installment, which will lead to practically unpaid principal of the loan. Thereby, your share in the value of the property will not increase over the time. However, there are two pros that are worth mentioning. The first one is that, yes, you will have a more affordable monthly payment for a much longer term. The second pro is that with a 40-year loan, you will have a more flexible mortgage structure. You can choose to pay only interest for the first few years of ownership. If you're having a hard time paying off your existing 30-year or 15-year loan, you can always try to modify them into a 40-year mortgage, and that way you will possibly lower your monthly payments. Now let's calculate and compare the monthly payments in the case of a 30-year and 40-year mortgages. Let's use an online calculator for that purpose. For instance, you're buying a $1.5 million house. Your down payment is $300,000 with a 40-year mortgage and a 6.5% rate. You're looking at $7,025 per month, including interest and principal. Now with a 30-year mortgage, given a slightly better rate that you will get, considering it will be qualified mortgage, let's say 6% loan, your payment will be about $7,200. The total overpayment of interest for 40 years will be almost $2.2 million. And if you are getting a 30-year mortgage, you would overpay $1.4 million. So you're spending extra $800,000 on interest if you obtain a mortgage for 40 years. Now, since we know the numbers, the fact is that your monthly payment will be only $200 less if you get a 40-year loan over the 30-year mortgage. Is it really worth obtaining such a long-term loan? I think the answer is pretty obvious. In my opinion, if you're wondering what type of loan is the most appropriate for you and how much mortgage you can comfortably qualify for, please feel free to contact us. We will connect you with the best lenders in business. There are many other programs that can be very beneficial for you and your family. I hope this was really helpful for you. Please consider subscribing to this channel and we will see you in the next one.